back to this week's market update. Today is Monday, January 12th, 2026, and we will jump right in. The week began with heightened geopolitical activity following the U.S. capture of the Venezuelan president. As the week progressed, geopolitical tensions generally eased, with the first full trading week of the new year bringing in some modest gains. We had the S&P 500 up 0.93%, the Dow up 1.08%, and the Nasdaq Composite up 1.18% last week. Moving into our economic data from last week, we did get the December jobs report. Showed the unemployment rate coming down to 4.4%, which was lower than expected. However, non-farm payroll rose at a slower than expected 50,000 jobs in the month of December. Job gains came from food, services and drinking places, healthcare, and social assistance, while retail trade continued to shed jobs. On a full year basis, payroll employment increased by a total of 584,000 jobs in 2025, which is averaging about 49,000 new jobs per month, which is a notable deceleration from the 2 million jobs added in 2024, which averaged about 168,000 new jobs per month. Wage growth remained a stabilizing force in the December jobs report, with average hourly earnings rising 3.8% year over year, continuing to outpace inflation and support real wage gains. As a whole, this data suggests that the labor market has been cooling at a very measured pace, consistent with a stable economic backdrop and little evidence of any sudden deterioration. Also last week, consumer sentiment improved modestly in January, rising 2.1% from the month, supported largely by stronger current expectations, which were up 4% in the month. This small improvement stands in contrast to the broader trend, though, as sentiment remains down almost 25% from a year ago, even though this month's reading was the highest since September. Survey responses indicated that consumers continue to focus on kitchen table issues such as high prices and the softening labor market, as we just took a look at. Next in the week, we also got the ISM manufacturing indexes that we'll take a look at in the next slides. The ISM manufacturing index moved further into contractionary territory in December, falling about 30 basis points to 47.9%. This was largely due to some weakness in new orders, employment weakness, inventories weakness, as well as a falling backlog and weak exports. On the other hand, we did have production in positive territory, deliveries slightly positive, and prices positive as inflation continues to be above the long-term average. In contrast to manufacturing, the ISM Services Index actually strengthened in December, moving from a slightly bullish 52.6% to a pretty bullish 54.4% in the month. This was due to some strength in business activity and production, new orders, stabilizing employment, as well as improvement in both exports and imports. Overall, the data continues to indicate that the services sector remains the primary source of growth for the U.S. economy, while manufacturing continues to put a drag on the economy. Last but not least, the U.S. goods and services trade deficit narrowed to a very low $29.4 billion in the month of October here, down $18.8 billion from September. This was the lowest monthly trade deficit since mid-2009. However, when you pan back to year-to-date for the first 10 months of 2025, the deficit was 7.7% higher compared to the same period in 2024, largely reflecting an early year surge in imports during this period ahead of the tariffs. The latest report highlights how tariffs have been reshaping global trade patterns and gradually nudging the U.S. towards a more deglobalized trade environment. So that concludes this week's market update. We really appreciate you tuning in, and we look forward to seeing you again very soon. The information you have heard is the view of Synergy Asset Management as of the date of publication. These views and opinions are subject to change without notice. Investors should not act on any recommendation, express or implied, or information in this material without obtaining specific advice from their financial advisors and should not rely on information herein as the primary basis for their investment decisions. Information contained herein is based on data obtained from publicly recognized sources and is believed to be reliable and is not expected to be updated after initial publication. This information has not been independently verified, and Synergy makes no representations or warranties as to its accuracy. The material has been prepared solely for informational, educational, and market commentary purposes and is not a solicitation of advisory services or an offer to buy or sell any security or to participate in any trading strategy.